Gold and silver just had their biggest one-day drop in history. And the culprit behind the move was actually this man right here, Mr. Kevin Warsh, Trump's next Fed chair pick. There was 3 runner-ups, Kevin Hassett, Rick Ryder, and then Kevin Warsh, and Trump went ahead and picked Kevin Warsh, which is surprisingly the more hawkish out of the 3. And so markets saw that as good news for the dollar. The dollar index rallied. You saw a little bit of softness in the equity markets, the S&P, the Nasdaq, US 30, the Russell, but the elephant in the room today is the precious metals market. You saw gold here at one point was down 16% from the highs, and silver, the monster of the 2, was down about 40% from the highs. Crazy move. And so that begs the question, was this the end of the metals run? Do we short metals from here? What's gonna happen? Are institutions manipulating markets? Those are all very valid questions and concerns. And let's actually start with that. Let's go ahead and look at the COT report for this week here. We can see that the Canadian dollar actually saw a good change here, plus 8% net change. You have the Aussie dollar, it has just been a monster recently, plus 5% net change. US dollar actually here top 4, 2.89% net change, erasing some of last week's bigger losses. And if we scroll down to the bottom, wow, you look at the Nikkei, down 15% here on the Nikkei. That is very concerning. Bond market's getting a little bit of action here, and the Swiss franc actually got a hit as well. Very interesting. So let's go ahead and talk about it. I got some questions today about the dollar index, and initially we can see here that the dollar broke this level of support, which I thought was going to hold at one point. It was holding once, twice, potentially a third time here, but we actually saw a break below it. Now the question is, was this a fake out or not, right? Initially, once we were getting into this level, I was looking to go ahead and fade the dollar. As we got back into this level, you know, the support could have turned into resistance and ultimately shorting it here and trading it lower, but we didn't actually get that. We got a pretty decisive close above this level here. And so that begs the question, is the trend in the dollar ultimately shifting, or are we looking to fade this? Well, from a technical perspective, we have decisively closed above this level of support, and so the next level of resistance in my eyes would be something like this. This would be another level where I'm looking to actually go ahead and fade the dollar, but the fundamentals will ultimately lead the direction. And so I'm a little bit conflicted, right? This pickup in the dollar was mostly because of the Fed pick being more hawkish than we thought, but also too, this morning we did get some inflation data out of the US. We got PPI, which came in harder than expected at 3% versus the 2.7% forecast there. And if we look at the overall economic outlook for the US from a holistic view, let's go ahead and break it down here. You have GDP doing quite well, PMI slight miss here, services and retail sales all came out pretty well. CPI here came in flat last time at 2.7, so still above the Fed's target of 2%. PPI today came in at 3%. This shows as red, but this is actually bullish for the US dollar, so a harder read there. PCE came in flat as well. Wage growth doing well. Unemployment rate ticked lower, which was a fantastic thing to see. But then you look at the jobless claims, JOLTS, ADP, non-farm payrolls, those are all still kind of shaky there. So the overall conclusion of that is that the US dollar is not in a terrible state, but it's also not in a fantastic shape. I think the US is pretty healthy, and if you compare it against the other major economies here, it's kind of holding its own, right? You have the euro at 71, the pound at 67, 83 for the Aussie and Kiwi. The CAD's doing pretty well as well. You get the point here. The Swiss franc is the only one that's getting a very bad reading. So it's not good, it's not bad. In my opinion, I think we're in a good position to go ahead and see what the future data releases show us. We do have NFP next week as well, which will be a data point from one of our weaker categories, which is the job market. So I think that will definitely go ahead and influence the dollar direction. So ultimately what I'm willing to do here, and I'm actually positioned this way at the moment, I have one trade on, and that is a euro dollar short. I went ahead and shorted the euro dollar right before FOMC because I thought the meeting was going to be neutral to hawkish for a couple reasons. At the time, we had some improving labor data added with that sticky inflation, and so the Fed for a very long time here has been juggling between the two. You know, the fear of a weakening labor market plus inflation being elevated. The labor market was improving a bit, and so I thought that the Fed was going to go ahead and put their focus more on targeting that elevated inflation, and the way they do that is by keeping rates steady, and that's what they did at the Fed meeting. That was not out of the ordinary. That was very much expected. However, I thought Powell was going to take a more neutral to hawkish stance. Another reason for that being is the Fed independence is currently being challenged right now, and honestly a lot of the questions pertaining that were pretty much dismissed by Powell, but nonetheless it seemed to be a net positive for the dollar. So I entered the position here, and I've been actually adding some micro positions here along the way, but essentially what I did was enter here, put a stop right above the highs, and I'm actually targeting this 1.1800 level here as a potential level of support. And the reason why I did that. It allows me to take advantage of the current dollar bullishness, but also doesn't put me in a position where I'm overcommitting to that bias, right? I think fundamentally things can go either way. So if you get the dollar go ahead and reach up to this 98, 97 level here, then the euro dollar will most likely be at this 1.18 level. And then I can actually take profits and reevaluate my position and see where to go from there. Ultimately, my bias is leaning towards a weaker dollar for many reasons. The way I would participate with that is actually the Aussie dollar. One thing I've actually been very adamant about is Aussie dollar long. However, I've been too conservative with my entries. I've been waiting recently for some deeper pullbacks and we haven't really gotten that. In fact, if you just look at the Aussie dollar chart here, it has just been chugging and chugging higher here with very little pullback opportunities. So what I'm looking to do different this time is I'm going to be a little bit creative. If I put the fib from low to high here, if the fundamentals make sense at the time, I'm going to go ahead and put an open position here at the 38.2% retracement level, but I'm going to do that with a 0.5% risk, right? So that allows me to be a little bit aggressive with my entry, but not have too much of a big size. And then I'm going to have another order here at the 61.8% retracement level for another 0.5 point size. And so that'll give me a full 1% position size being within my risk parameters if I ultimately get filled at these two positions. What that will do is that'll make my average cost look like this, and then I can actually put my stop loss here below this level of what could be support here. That's kind of what I'm eyeing at the moment. And then my take profit here will be at this level of resistance. I think that's a great trade. It's a one-to-one trade. You do have elevated inflation in the Australian economy. Actually, their CPI just came in hot this last week, but then you also have to remember that the US also got a little bit of the higher inflation data as well. And so that's why I'm going to open initially with a half risk and then take some discretion as for the new positions here. But fundamentally though, you do have the Central Bank of Australia, the RBA, looking to go ahead and increase their interest rate, while the Fed is actively looking to go ahead and lower the interest rates any chance they get. And so that relationship between the two central banks makes a lot of sense. And if I just look at the top sales page here on the Edge Finder, you see that the Aussie dollar is getting a +9 score, a very bullish reading. So as long as we continue to see that in play, then I'm going to go ahead and continue and go with my position here. Another thing to mention is gold, right? One of the things with the Australian economy is that their exports relies heavily on gold. And so when gold does very well, the Aussie dollar also benefits from that. And in my opinion, the landscape for gold is still in play. You do have geopolitical tensions, you have tariff threats, you have US v Iran, and then Cuba. You had that prospect of the government shutdown just now, and it's still possible, right? I think it'd be foolish to say that that theme is over, especially given the current presidency and his volatility and his choice of words. And so another round of any type of threats or uncertainties can go ahead and definitely lift off gold, as it's one of the preferred safe havens. And so that's another thing to look at here. If gold ultimately gets to this 4,600 level here, I think that's a good level of support. It'll most likely line up with that 50-day moving average. And if buyers do step in and take gold higher, indirectly, Aussie dollar will go ahead and benefit from that. And so that's why I think that trade is still very valid. And it seems like we're potentially falling with that theme with silver as well. Had a very crazy drop, nonetheless, insane drop. But look at the 50-day moving average here. It seems like buyers went ahead and stepped in here. This was also possibly another level of support. And this wick just kind of illustrates that buyers went ahead and stepped in at that 50-day moving average. So ultimately on the dollar, I'm looking to go ahead and get a pullback up into this level of resistance. And my bias is actually leaning shorting the dollar index. You can see dollar yen was getting sold off with the idea of yen intervention. The yen never went ahead and intervened, but the US Fed did go ahead and check rates for them to kind of see what that cost would look like. And so that thought alone went ahead and scared the markets. You can see dollar yen had a steep drop, and the dollar yen has since yet made a little bit of a retracement there. One danger zone I'm looking at for the dollar yen is this 50-day moving average. Perhaps we fill some of this gap here. This turns into a level of resistance, and then the dollar yen has another level or wave of going down lower. Dollar Swiss is another clean looking setup in my opinion. I'm looking to go ahead and short if we get to this level of resistance. This was a good level of support once, 2, 3, 4, 5 times here, and then we ultimately broke below it. And someone asked me a very valid question today, and the question was, well, Alan, if you're looking to go ahead and short at this level of resistance, why don't you just buy dollar Swiss, get a little bit of a quick profit there, and then repivot as we get to this 7,900 level? And I thought that was a very valid and awesome question. The reason why I don't want to do that is one of two things. If I do that on top of my current euro dollar short, then I'd be correlated in one direction. But the bigger reason why I don't want to do that is because the Swiss franc, along with the yen and gold and silver, is a safe haven asset. And in this current environment, we do get lots of flashes of, geopolitical escalations, volatility, tariff threats, things like that. Those headlines seem to come every other week. And so the dollar Swiss is very much reactive to that, especially because this pair includes the dollar, and the recent theme was sell America, as more and more people are starting to shift their confidence away from the US. And so ultimately that risk of go ahead and buying here and then targeting here, I think it's too big of a risk, right? Especially if you look left, you know, you always want to look at like potential level of support where buyers can step in, right, in case this thing goes against you. But if you look left, you really have nothing to really guide off of. And especially one thing, if I go to the weekly time frame here, the next level of what could be support is all the way down here at that 7,000 level. So if I measure the move out here, if I go from where price is now up into here, that's about 700 pips away. And so that's pretty risky for me to go ahead and risk 700 pips to the downside when I'm trying to capture 132 pips. And so that's the reason why I don't want to go ahead and go through with that. So that's going to be my game plan here. I'm going to see if the dollar index goes ahead and chugs higher here. Perhaps we get into this next recent or closer level of resistance. We'll see what happens here. If the dollar index makes its way up into this level, then most likely the euro dollar finds its way to that 1.1800 level, and then I can take my profits and kind of repivot there. My bias is currently leaning to the downside on the dollar index longer term here. The way I'd participate by doing that is by going long Aussie dollar by being creative. Like I said, 0.5% here at 38.2%, being open-minded to go ahead and capture the 61.8% with another 0.5%. That allows me to participate somewhat early on, but also build a bigger position size if it allows me to, if price, you know, finds a pullback. Lately it hasn't. And then ideally, if we can get dollar Swiss up into this level of resistance at the 78,500 level, then I will look to go ahead and go short on that pair. But yeah, what a crazy move here on the metals. I mean, silver was the monster of the day. I definitely had to make a video about this, and my apologies for not being very consistent on the long form videos. We're actually going to be moving cities, relocating, so I have a lot of things on my plate here, but nonetheless, this was a very must do video. And what I will say is I'm going to put more emphasis on the long form video. So even if I don't post every day, I do want to make the quality better. That way they're worth watching whenever I do go ahead and drop them. But yeah, what a crazy Friday today was. I'd love to know your thoughts. Do you think silver and gold are going to continue their drop next week, or is this a perfect buy the dip opportunity? Go ahead and comment below. I'm looking forward to reading them. Have a blessed rest of your day. Bye-bye.